People say, can Bitcoin go higher than 100K? Well, the way I think about it is right now, Bitcoin's about $1.5 trillion in market cap. It's going after a $400 to $500 trillion opportunity. And that's in purchasing power terms. So in dollar terms, that'll go up as the currency weakens. So I think Bitcoin still has a 400 to 500x left in it.
Mallers begins by pointing out a fundamental reality. The U.S. is in a position where it has no choice but to debase its currency. The long-term trajectory of the dollar is one of inevitable decline. Over time, it buys less and less. This is not speculation. It is an observable pattern in economic history. The primary beneficiaries of this system are those who own assets, while those without assets suffer from wealth erosion. Currently, humans collectively own around $900 trillion worth of assets, including real estate, stocks, and precious metals. About half of this, roughly $400 to $500 trillion, is not consumed for utility, but rather serves as a store of value. The demand for effective wealth storage is massive, and Bitcoin is uniquely positioned to fulfill this need.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The U.S. is in a position where they have to debase and weaken the currency. It is implied in the current state of the U.S. dollar. You've seen this iterations, like you have 1933, we're going to confiscate your gold. Then you have 1971, screw the gold standard. We're going to give ourselves the ability to debase and weaken the currency as needed. We're not going to be governed by the laws of Mother Nature. And so it's pretty implied that the purchasing power of the dollar over a long enough time frame is only going down, no other direction. So what does that mean for the reason there's such a large wealth gap in America is because you either own assets or you don't. When they weaken the dollar, that's good for assets. That means real estate's going up. That means your stock portfolio is going up. That means the Miami mansion on the water is going to go from being worth $1 million to $100 million. And that means, someone hardworking and lucky enough can acquire it to only Ken Griffin is going to be able to buy it. That's because of a weaker dollar. And so what you have is a very binary divide in the country. You either can afford Manhattan real estate, beachfront real estate, large assets that are expensive and are usually passed down generationally and have some advantage, or you're more paycheck to paycheck, savings account. You kind of have a Robinhood stock portfolio and you're punting some stuff based on following Pomp on Twitter. And it's that category of America that's growing, because it's very hard to outpace the amount of currency that the U.S. has to issue. Not everyone can get access in Silicon Valley to the new Facebooks and the new NVIDIAs of the world, but everyone can get Bitcoin. And it's the best performant of all of these anyway. I've outperformed Ken Griffin by doing nothing but buying Bitcoin. And so that is the most empowering part, is that everyone can be an asset holder, an owner of property, and actually gain benefit from a depreciating currency and protect their ability to have a better life tomorrow than they do today. Humans own about $900 trillion worth of stuff right now. That's currency, real estate, art, collectibles, precious metals like gold, right? $900 trillion worth of stuff. It's estimated that about half of that is monetized, meaning they own the stuff, they own the house, they own the art, they own the precious metal, not to consume it, not to live in the house, not to look at the art and be like, oh, I love this art, but because they're trying to store wealth, they're trying to preserve value, they're going to sell it later. So that means the market opportunity to store wealth, store value, persist value you create for the world today and bring it to tomorrow is about $400 to $500 trillion. And that is where product market fit and extreme demand is, from Larry Fink, from the bond market, from the treasury market, from retail consumers, from those living paycheck to paycheck. That's the product market we see in Strike. And the payment stuff, I would say less so. I would say less so. So when people say, can Bitcoin go higher than 100K? Well, the way I think about it is right now, Bitcoin's about $1.5 trillion in market cap. It's going after a $400 to $500 trillion opportunity. And that's in purchasing power terms. So in dollar terms, that'll go up as the currency weakens. So I think Bitcoin still has a 400 to 500x left in it. And we see that as a company. We onboard institutions, businesses, retail. We support the dollar, the pound, the euro. So we see the same demand globally, the same growth prospects globally. And that's where the product market fit is for us. I think Bitcoin's going to grow to hundreds of trillions of dollars in market cap. And there's going to be a lot of opportunity for all of us to share in that. If we wanted a more stable value, we can make the currency units dynamic. We can change how much Bitcoin should exist based on trying to achieve a stable value. If we want dynamic price, meaning it's going to bounce around a lot, we should fix the currency units. And he was being a little humble and joking, but the point is, if you're going to give the world an absolute scarce asset, the only provably fixed asset in the history of our species, and you're going to give it global free market access, it's going to be volatile. And where there's risk, there's reward. If you look at Bitcoin's Sharpe ratio, it's greater than the Mag 7, than the S&P 500, than gold. And so as a business too, we accept that. I firmly believe that any attempt to restore harmony in society rests on the renewal of personal responsibility.
Mallers views El Salvador's Bitcoin adoption as a unique case due to its lack of a sovereign currency. The country had no ability to print its own money, making Bitcoin an attractive alternative. However, he does not expect widespread replication of El Salvador's model, as most nations have their own central banks and entrenched monetary systems. That said, he believes the United States will eventually move toward legitimizing Bitcoin, not out of ideological support, but because it aligns with core American values like financial freedom, open networks, and economic sovereignty. As the U.S. faces mounting economic challenges, a neutral reserve asset like Bitcoin becomes increasingly rational.
I welcome Wall Street. They're trying to solve very specific problems. The bond market, not good. The long-term viability right now of those instruments, not good. It looks like the United States and Trump are going to get their weaker dollar and finance reshoring and do what they need to do at the expense of those buying these long-duration instruments. So what is Wall Street doing? Larry Fink's trying to sell people what they need, which is a way to retain purchasing power and actually be performant in real terms. If you do the math on like a 60-40 portfolio versus like a 55-45 with a little Bitcoin, or a 60-35-5, you can look at the graph. It's like just a little exposure to this thing goes a long way for the biggest financial market in the world, which is like bond market, treasuries. And so that's fine with me. Would I want to broker my access to Bitcoin through Larry Fink? Yeah, no thanks. I don't own any ETFs. I also don't own MSTR. As much as I love Saylor, like, I'm cool, man. I don't know you that well. So I own my own Bitcoin. But that's fine. And the free market will figure these things out in the meantime. So I think it's great. Bitcoin's like universal acid. Somehow it seeps into areas that you never would have expected, and it conquers it. And, Wall Street's no exception. I think El Salvador's situation, as remarkable and impressive of a story it was, I think it was unique. They didn't have their own currency. So I think of money as our time and energy in an abstracted form, right? Like everyone in this room, you wake up, you do something valuable for the world, and in return for that, you get money. So money, in a funny way, is your time, your energy, your effort, your labor, your work, right? And El Salvador didn't have the ability to print that. That's a powerful thing if you can print time and energy, right? And so they didn't have their own currency. They were destructed after a civil war. They were one of the most violent places in the world. And so I would say it was very unique in the type of leader and the type of macroeconomic situation they were in. Being on the dollar, adopting a new currency wasn't as jaw-dropping as if someone with their own central bank and their own ability to print money. So It doesn't surprise me that there wasn't any fast follows. I think that story being replicated is actually harder than what meets the eye. I think Naib's a tremendous leader, and he made it look easier than it actually is. But I would say that, being the world reserve currency is not a sustainable position. Just in like Triffin's dilemma. I'm not speaking biasly as a Bitcoiner. I'm speaking factually. I think a neutral reserve asset is natural. And so I've always said that it wouldn't surprise me after El Salvador was able to prove out that this is practical and feasible, and they're able to ride both a bull and bear market, that the United States, as someone who's next to legitimize the asset, makes a ton of sense, because it's pro-growth, it's pro-technology, it's pro-industry, it's pro-energy, it's pro a lot of the things that both the new administration has campaigned on, but us as a country. I mean, freedom, open networks, freedom of speech, freedom of property rights, right? And then on top of that, we have a world reserve currency problem where we import real stuff and we export not real stuff. And that's part of being the world reserve currency. So I don't know if that's the answer you're looking for, but I think it's all kind of playing out pretty rationally. Yeah, I think what we're living through right now, I would describe as the unwind from World War II, or the world wars generally, right? I would say, just to remind everyone, not that you don't know, but the world was decimated, right? And the US was in a strong position. And the global relationship came about as the US effectively saying, hey, we'll help you guys get off your feet. I'll tell you what, you can produce stuff for us, and we will export you the new world reserve currency to kind of get you back up on your feet. You need a customer. You need someone to import your goods and services. And also, if we produce stuff locally in the US, we'd have no one to export it to, because you guys are decimated, crushed, and poor. And so you've seen all these markets importing real stuff into the US, all the stuff we need. Oil, food, right? All the stuff that we all consume, and we get 2-car garages, and we get the big flat screen TVs. And in return, we distributed the new world reserve currency, which was the US dollar. Okay, that worked and was very kind of us in a biased American way. Obviously we get our advantages from that. But I think where the world is now is like, okay, cool. Thanks for helping us get back on our feet. Now what? Because we don't want to give you guys real stuff to consume and have amazing lives in exchange for this piece of paper you print. And you see Russia, you see China, they don't want to continue to buy our debt. The amount of treasuries that they are investing in is going down. They're talking about BRICS. I don't think that's an actual threat or anything we'll see in practice, but it's a rotation away from the dollar. No world reserve currency has had any staying power because you have to operate in a deficit. You have to export your currency and import real stuff, and it's unsustainable. You're importing goods in debt to give out a piece of paper.
Mallers contextualizes the current global economic shift as the slow unwind of the post-World War II financial system. In the aftermath of the war, the U.S. took on the role of economic stabilizer, providing global liquidity through the dollar. This arrangement worked for decades, but now nations like China and Russia are reducing their reliance on U.S. treasuries and seeking alternatives to the dollar-based system. The sustainability of the U.S. dollar as the global reserve currency is in question. The traditional model, where the U.S. imports real goods and exports paper money, is facing growing resistance. This reality, combined with America's escalating debt, makes long-term reliance on the current system untenable. Please like and subscribe.